So, I have recently found this mining company, Base Resources, which has an insane value proposition. For example, they are trading at a forward price-to-earnings ratio of about 2.5. That, while the stock market as a whole is currently trading for a price-to-earnings ratio of about 22. So, a price-to-earnings ratio of 2.5 is low. Really low. Moreover, the entire company is worth about 197 million US dollars, while they hold about 60 million US dollars in cash. That is net cash. The company holds no debt. Now, why the freak is this company so cheap? Well, there might be a couple of pretty good reasons for that. Anyways, this bad boy right here still bought stock of this company. So in this video, let me first explain what is wrong with the company and why the stock price is so freaking cheap. And then afterwards we'll talk about why I still went ahead and yeeted my hard-earned money right into this company. And especially why this stock is worth your attention. So let's start off with the bad. And the bad starts off on this slide. And really it starts off with the Kwale operations. You see, Kwale in Kenya is the moneymaker for the business. Kwale is Base Resources mineral sands property, which is responsible for all of the profits of the company. And for the fiscal year 2022, which ended in June 2022, this plant was actually responsible for about 6.8 US dollar cents per share in net income. That is a lot of profits, especially compared to the current share price, which clocks in at just 16 US dollar cents per share. But that's all good, right? That puts the company at a price-to-earnings ratio of about 2.3. That is a tremendous value proposition. And well, yes, it is. This is actually the main reason why I have invested in this business. Their processing plant in Kwale is a true money-making machine. But the resource tied together with this processing facility, as it currently stands, runs out in December 2024. So that is the entire crux. Base Resources money-making machine, as it currently is, has a finite life on paper. Now, important to note, the company does also have the rights to 2 different properties, one of which is located in Tanzania and is actively being drilled as we speak. More on this later. And of course, the company is also working on a property located in Madagascar, which has really interesting characteristics from both a financial and a purity standpoint. But this one, the Madagascar property, will at the earliest start earning revenues in early 2026. So the main problem with Base Resources is that its mine in Kenya, the Kwale property, has a finite life on paper, and the end of life is approaching fast. Now, I personally do not see that as a massive problem for 2 main reasons. The second reason has to do with the current share price and valuation of Base Resources. More on that in just a bit. But let's first talk about the extension kit. The Kenyan mine might be almost depleted on paper, so that December 2024 timeline. But in reality, that might be far from the truth. And to explain why that is, we first have to dive a bit deeper into this map. First up, we have the processing facility, which is located right here. Next to the processing facility, we have the yellow area right here, which is called Kwale Central. And this one's actually completely depleted already. Down below this red area, we have Kwale South, which is actually one of the areas that's being mined until 2024. We also have Kwale North, which is also a part of the plans until 2024, but that leaves us Kwale East, and this part of the map is entirely up for grabs. Kwale East is being drilled as we speak, since the company previously hasn't really researched this part of the property yet. So as we can see, the direct vicinity of Kwale might contain significantly more mineral sand resources than were previously taken into account, and those could significantly lengthen the life of mine. Kwale East might add a couple of months or even years to the operations of Kwale. Months or even years of operations will be significantly value added for a potential investor. Moreover, we haven't even discussed the drilling that's being done in Tanzania, just a few kilometers away from Kwale. As we can see, 122 holes were drilled for a total of 3,000 meters of length, and 3,000 samples were sent to Kwale operations for assaying. And we are expecting these results by March 2023, which is really soon. All that is to say, there might be significantly more resources available for the Quale operations than are currently available on paper. And thus far we have only discussed the parts of the map that Base Resources is actively drilling. But as we can see from this map, the company has massive areas both in Kenya and Tanzania yet to be drilled. For example, this entire black region located south of Quale is yet to be researched. And for these massive red areas located right here, well, Base Resources has filed applications to start drilling at some point in the future. So because the company has so many freaking leads for more resources, it seems very likely to me that they will at least find some additional resource to be mined beyond December 2024 for the Quale operation. And if the company is indeed able to find more resources to mine, I believe that to be a significant catalyst for the stock. Because as the stock is currently being valued, it seems like that exploration of December 2024 is seen as quite definitive. Let me explain. The share price. Okay, so on the stock market, Base Resources is a $0.16 stock. And at the current amount of fully diluted shares outstanding, that makes this company a $197 million company, again on a fully diluted basis. While during the latest quarter, which ended in December 2022 by the way, the company told us they held $60 million in cash while they held no debt. So if we take into account that current net cash position, the company isn't really a $197 million company. No, if you were to buy stock today, you are effectively paying $137 million for the company itself. And between today and the end of 2024, the company has 2 more fiscal years to publish. And for the entirety of 2023, the company is forecasting these production amounts, combined with a forecasted average sales price per ton for these materials between $714 and $651 per ton. So I just copied the middle of the road production figures with the middle of the road price per ton projection, and that results of the company's forecast of about $260 million in revenue in 2023. During fiscal year 2022, the company managed a net income margin of almost 30%. So if we just apply net income margin of 25% to be more conservative, we get to my prediction of about $64 million in net income during fiscal year 2023, which comes down to almost 6 cents per share in net income. Therefore, I believe we can expect at least 11 cents per share in net income between now and December 2024. I believe 12 or 13 cents to be more accurate, but 11 cents is more conservative. Okay, so my point really is, if we take a look at the current share price of $0.16 per share, if we subtract that net cash position the company has at about 5 cents per share, we get to the true company value of 11 cents per share, which is right about the figure that I predict the company will do in net income between now and December 2024. So my point is, the company is currently being valued as if the mine will run out in December 2024 and everything after that is doomed to fail. The company is currently being valued as if all these drillings will add 0 months in actual operations for Quale. And the stock seems to completely ignore the plans in Madagascar, which I believe to be kind of fair because they are so freaking darn far out. But yeah, that is the entire crux of this investment in my opinion. The company is being valued in the stock market as if everything after December 2024 is doomed to fail. But that also means that each and every success that the company has between now and 2024, either in drilling in Kenya or Tanzania, or on its progress and its Madagascar plans, well, each success will be a massive catalyst for the stock. To me, this is the classic example of heads I win big, tails I do not lose much. Thanks to that big cash position and the amount of net income that the company will generate between now and 2024. Now, time for the classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses you make while trading according to my opinions. Please do your own due diligence. And with that said, thank you so much for watching. I love you all. Peace.